Have you ever thought of risking 100,000 naira on an investment but having the potential to make 500,000 naira? That's the power of the asymmetry carry strategy, a high risk management rule used by professional investors. Instead of chasing small profits, we focus on opportunities where the potential rewards are significantly disproportionate to the potential risk. The risk to reward here is not linear at all. That is, a risk of 1 naira does not give you a reward of 2 naira. It could give a reward of say 5 naira or even more. This is built on the principle of the power law, where a small number of successful investments provide the vast majority of total returns, more than offsetting the potential losses for that investment. I used this strategy on my foreign portfolio last year. I saw huge profits in the end, and I'm going to show you on this video. I do not preach what I do not practice. Today, I will show you how this strategy can be applied practically to stocks on the Nigerian exchange. So you might want to watch this till the end to see how it is that you could profit from this particular strategy on the Nigerian exchange too. This video will be broken down into 4 different sections. So section 1 will tell us about the concept of this strategy. The asymmetry carry strategy simply means for every 1 naira you risk, you aim to make 5 naira profit or even more, which is the risk-reward ratio. This concept is linked to Nassim Taleb, a legendary hedge fund manager. It is popular in both stocks and business investments. Assets like early stage startup, micro cap, or penny stocks as some people call it, even cryptocurrencies like the altcoin. So these are pretty high risk investments, but it works best when combined with good analysis and discipline, and not a standalone strategy. So you should know that you have to carry very serious research before employing this particular strategy to grow your investment. The principle is simple. Asymmetric trades do not need a high success rate because the winners significantly outweighs the losers. So an investor can be wrong 60 to 70% of the time and still be highly profitable in its investment. You see that even if you are wrong multiple times, one good or 2 good investments can easily make you profitable. As I said earlier, I said I was going to show you how I employ this particular strategy in my foreign portfolio. So now let us take a look at it. Last year, I bought 5 stocks for $50 each. They were low cap and penny stocks. I held the 5 stocks for about 6 months before I sold. I held Wishtech Robotics, Symbiotic Incorporation, Applied Digital Corporation, GitLab, and also Wolfspeed Incorporated. So you can see right now from Wishtech Robotics that I earned $355 from an initial purchase of $50. That is the 7x that I'm talking about. Then the next one, which is Applied Digital, I earned $210 from an initial $50 I used in purchasing that stock. So for Symbiotic Corporation, I sold and I got $152 from an initial purchase of $50. So that is a 3x over there. So GitLab, I just broke even, right? I could consider it a $1 loss, but I would just say I broke even. Then the last one, which is a Wolfspeed. This one did me dirty, right? So you can see that I'm at a 84.44% loss, right? And what I have as my current value is $9.29. So this is almost gone. I would say this is almost gone. So I don't consider this one as I'm waiting for it to come back up. I've already I've already taken my loss for this one. But the good thing is that the order of my trade, they're able to cover up the losses that I experienced here. So that is just the good thing with this asymmetric carry strategy. So I had 3 winning trades, which gave me $700. Then one broke even, that is $50. Then the other, which I considered a loss, I was down by $50 too. So you can see that after my sales, I got a revenue of
$750
minus my principal, which was $250. That gave me
$500
was my profit for that investment set. So this is
200%
profit on that investment, which is not bad at all, which is very good, very secured, right? So you can see from my experience that you don't need to be successful on all stocks. You just need 1 or 2 big winners to cover the losses of others. Then if you are lucky enough to have 3 or all 5 winners in that set of investment, then you should consider yourself a genius. So in this session, we are going to cite illustration using Nigerian stocks and applying this investment strategy to them. So now let us practicalize this concept using stocks listed on the NGX, that is the Nigerian exchange. Imagine analyzing 5 emerging companies like Unicel Interlink PLC, Nicure Industries, CWG, Secure Electronics, Alex Aluminium Extrusion. These are 5 low-cap stocks from different industries. So you see that the risk is well spread, right? Spread across different industries. So if one industry gets hit, at least the other will tend to cover up for any potential losses. When you buy each stock for 50,000 naira, right, expecting a 5 times growth on your investment, so it will be like the 5 of them will now amount to 250k. For the past 6 months, you held these 5 stocks. So 1 or 2 of them could reach your target and even surpass it in a healthy market or even in a bull run, right? For the sake of this illustration, we are going to use the market performance of these stocks in the last 6 months. So we had 3 winning stocks amongst the 5 of them, right? We had one that broke even. So I just want to consider the worst case scenario in the last stock. I would say that we totally lost on that particular stock. But Alex Aluminium Extrusion did not lose. It did almost a 2x from the last 6 months to the present time. But for the sake of this illustration, we just want to incorporate a worst case scenario in this illustration. So Unicel did 6x, which is 300,000 naira. We have Nicure Industries, which did 3x, that is 150,000 naira, right? We also had what's the next one now? We had CWG, we did 2x, right? That is 100,000. So Secure Electronics did 2x too, which is 100,000 naira. So we just want to consider that Alex Aluminium Extrusion did not perform, or it went down to 0. Let's just use that analogy so that we could get better context applying this strategy. So when you add up all of the value, you have 650,000 naira. From your 250k investment, you got a profit of 400,000 naira, which makes it a profitable investment of
140%.
Right? So that is very fair enough. With little risk, right? With cushion and by hedging against possible losses from the 5 stocks that you just picked. You can see that it gave you a very reasonable profit in just 6 months. And you're not supposed to, you may not hold for 6 months, you could hold for a year to further maximize your profit potential. So if you found this video informative so far, kindly do me a favor, kindly subscribe to this channel right now. And also, you can like and share this video with people around you that wants to learn about investment and finance, right? So with that said, let's get back to the video. Now let's look at the third section that will tell us why most investors still fail with this strategy. Some investors take small profits quite quickly. They do not give the investment the needed time for significant growth. Some investors also have zero loss tolerance. At the back of their mind, they are not considering any loss whatsoever. They are just in the investment for profit taking, and which is not practical at all. This would create the worst possible ratio. For example, when you raise 50,000 naira to make 250,000 naira, indisciplined investors will panic sell when they see one of their stocks go down, say by 20%, and they may not give the market reasonable time to recover. Also, some investors may be quick to sell their stocks when they see maybe a 2x, right, or a 3x. They just quickly sell everything. This is not bad, but when you forget the initial plan or the time frame that you allotted to that investment, that shows that you are not very disciplined. So the first section takes us to why professional investors like using this rule. The advantage in this approach forces investors to focus on high potential opportunities. Even with a 60% success rate, investors can still steadily grow their portfolio. This is because winners are much larger than losses. This strategy allows an investor to be warm most of the time, but at the end of the day, still make profit from the investment. Instead of chasing small gains, investors look for asymmetric opportunities where upside is much larger than the downside. It also improves discipline, risk management, and long-term consistency. So an important warning is that the asymmetry carry strategy does not just guarantee profit, right? It works best when combined with technical analysis, fundamental analysis, strong risk management, and most importantly, you have to apply patience to this strategy. Not every stock will offer you that 5 times opportunity, but when it appears, it could be very powerful for your portfolio. So in closing, the difference between professional investors and beginners is risk management. Professionals don't just focus on what they can get from that trade. They also consider how much they could lose to. And strategies like this help investors stay disciplined in the market. So if you want to see more videos about stock investing strategies and NGX opportunities, subscribe to this channel right now, because the more you understand how the market works, the better your investment decision becomes. So check out my video over here to know how to invest during times of war. And remember guys, wealth is not luck, wealth is built by information followed with execution. Until I see you next time, peace out.